We work with law enforcement to help them catch bad guys, and help them follow the money and see where it goes. So folks like ransomware, human traffickers, darknet markets. And we also work with financial institutions and other crypto custodians to help protect them from risks, to make sure that they're not interacting with any of these kind of illicit actors on chain.
My next guest is Max Gulka. He's the co-founder and CEO of Elementus. Max, welcome.
Glad to be here.
Max, this is an intriguing proposition. The company is billed as the first universal blockchain search engine, and that is intriguing on so many levels. Can you give us a bit of a description of the idea, the concept behind it, the value proposition for its investors?
Going back to the telephone system as an analogy, also just like the blockchain, a big open database in a sense, a big open network. But in order to find your way through it and in order to properly use it, you needed a phone book, the Yellow Pages, as sort of the global map or index to the phone network. Looking forward to the web, the analog to the phone book is obviously the search engine, in particular Google, which allows you to find your way through the web, which is also entirely open and transparent, but is just quite big and very difficult to tame without the search engine. And going into the blockchain, similar profile, a very big, open, transparent network, but one that is hard to make sense of and hard to properly use without a global indexing function, which is what we aim to build at Elementus. And just like the purpose of the search engine was very different from the purpose of the phone book, what we're doing, it fits a very different purpose from Google. The use cases that we focus on are for, we work with law enforcement to help them catch bad guys and help them follow the money and see where it goes. So folks like ransomware, human traffickers, darknet markets. And we also work with financial institutions and other crypto custodians to help protect them from risks, to make sure that they're not interacting with any of these kind of illicit actors on chain. And as the ecosystem develops, I foresee this being the need to be able to see who you're interacting with and what's happening on chain as being a fundamental need of really anybody who is operating in the blockchain.
So how does that reconcile with the fundamental value proposition of a blockchain's privacy in terms of transacting?
It's a tough balance, and I think that in some ways there is always going to be a natural equilibrium. So often, I think the view is that use cases like the ones that we're focused on are somewhat diametrically opposed to people that are building privacy technologies. And actually, I would say that we are actually 100% aligned. That for blockchain tech, for cryptocurrency to gain adoption, there are two things that are strictly necessary. For one, people need to be able to transact privately and not have their information out in the open. I would not want to be operating if my bank account statement was out in the open for anybody to read. So the privacy aspect of it is absolutely paramount to cryptocurrency gaining adoption. What is also necessary is for laws to be enforceable. If laws are not enforceable, and if there is no transparency at all and no ability to follow the money and to see what's happening, it's also not going to gain adoption. It's not going to be it's going to be too dangerous for people to get involved if criminals are able to use the blockchain freely and rampantly. And if governments don't have that transparency, then that's when governments are going to stamp down and just disallow it. And I would say that so you need both, and you have a good analog for that just looking at the traditional fiat system. Right? On the one hand, you have bank transfers, and on the other hand, you have cash, which is, for all intents and purposes, untraceable. But that being said, cash doesn't allow, just because it's untraceable, doesn't allow money launderers to just get away with what they're doing. They don't exclusively use cash because If you show up with, say, a duffel bag full of hundreds at your bank to make a deposit, that's unlikely to go by without raising some eyebrows and taking on more scrutiny. So in the long term, I foresee kind of some of these privacy technologies operating side by side with the portion of the blockchain that is transparent and that is viewable and auditable. And
certainly the Federal Reserve's white paper recently sort of partially leaked about the future of cryptocurrencies was interpreted by the crypto community as being net positive towards the responsible development of cryptocurrencies. Yet to me, I mean, as a crypto skeptic, as it pertains to Bitcoin and cryptocurrencies in particular, it was very plain to me that the only cryptocurrencies that are ever going to be permitted are those which can be traced and tracked. There is no such thing as privacy in today's modern financial universe, given, call it the pretext of terrorism, whose capitalization must be tracked, whose financiers must be tracked. And but also from the perspective of taxation. I mean, governments run on taxes, and so it's been since the sort of deprecation of offshore banking through the launch of the Patriot Act and Switzerland and all these offshore havens now have to disclose all their transactions. So it strikes me as inevitable that a search engine that can accurately trace and track certain transactions is going to be required. Now, you have an affiliation with Palantir Technologies, who is also in the business of tracing and tracking and identifying patterns in big data through analytics that serve the purposes of detection of threats for law enforcement, among other things. Obviously, they use it in marketing and advertising as well, but a lot of people I talk to misunderstand that Palantir's real sort of attraction for governments is its ability to sift through the big data, all of the sensors out there capturing all the conversations and the emails and the texts. I mean, it needs reconciliation, etc. So to what extent is the sort of that ability to sift through the vast amounts of information we now generate part of your blockchain technology?
You raised several different questions there, which I'd like to respond to. So hopefully I'll remember all of them. Well, I'll say, first of all, relating to Palantir, we are members of their Foundry for Builders program. So we use their software. We license their software Foundry. It's the user interface to Echo, which is our business intelligence and market data offering. But that's the extent of our relationship with Palantir. So our business dealings and their business dealings are completely unrelated and independent of each other. So we don't have any kind of partnership or affiliation in any sense other than licensing their software. What we do have in common, and the reason why we license their software, is of course because we are sifting through large amounts of data and trying to make sense of it. I would say that when you talk about sifting through large amounts of data, that can evoke ideas of kind of what you lay out, the Internet of Things, and sort of tracking people and their locations. And so I want to be very clear that we do no tracking of individuals. So when we're looking on the blockchain, what we're looking at is different kinds of entities that are operating. So that includes some of the larger exchanges, and as well as gambling sites, payment processors, that sort of thing. Our primary focus is on sort of the darker side of the blockchain, which would include darknet markets, ransomware, Russian crime syndicates, human traffickers, entities like that. And that's where our focus is on identifying those on chain. Individuals, for one, that's there is no contemplation on our side of tracking individuals. It's that just from an ideological viewpoint, that would not be something that we're comfortable with. That being said, even if we wanted to, I don't think we could. That would be a very difficult prospect.
If the cryptocurrencies continue to act as units of trade as they currently do, unofficially yet tolerated by governments, then do the operators of blockchains, which, they claim decentralization, but the closer you look at most blockchains, the more you can detect an element of centralization, either based on the fact of the community who maintains it, which is certainly a subset of the human race, so therefore centralized in that segment of society. Or then, of course, you have, in the case of Ethereum, it's been revealed that JP Morgan has become the majority shareholder of the company that operates the two platforms that access the Ethereum blockchain. So are you reliant on elements of the blockchain cryptocurrency community to provide you interior vision or look or access to the transactional flow on the blockchain?
No. To your point about the centralization of blockchains, I do think that is a problem, that it is a handful of mining pools that control the vast majority of the mining power on both Ethereum and on Bitcoin. That is a concern. The Bitcoin is also predominantly held in the hands of a few parties. So if Bitcoin goes on to become, say, the world currency, it doesn't make sense for there to be a handful of individuals that have, I don't know what percent, but call it 20% of it sitting with a small number of people. So I do think those are problems. All that being said, I would separate that centralization from anything that we're focused on. We do not rely on any kind of proactive action by the blockchains to provide us with information. You have privacy blockchains like Monero, where we have zero visibility, and I'm not going to say that it's impossible to be able to see through Monero, but we have no interest in doing that. That's a privacy technology, and that is capable of coexisting perfectly well alongside the more transparent solutions like Bitcoin. And to be even more specific, I would say that one of the big developments that's coming up in Bitcoin, which is talked about, but I think not nearly enough, is the second layer solutions, most notably the Lightning Network. And the Lightning Network is going to allow people to transact, essentially for free. The transaction fees are a fraction of a cent. It's instantaneous, so the transactions are confirmed immediately. It's essentially infinitely scalable, far beyond the number of transactions that can be managed by, say, credit card companies or really any benchmark in the traditional world. And as a side benefit, it's also anonymous. It uses the same technology that Tor, the deep web browser. It uses the same technology that uses, called onion routing. So it's really inevitable, and I should say Lightning Network is already functional right now, right on the Bitcoin mainnet. And so that's one of many examples of privacy technologies and ways of transacting privately. I think the way that the balance is going to be achieved between the auditability of the first layer blockchain and the anonymity of the second layer solutions is simply that, very, very much like cash, the way cash works in the traditional world. It's that if the amounts you're transacting are not huge, it's not going to raise any eyebrows. If you go to pay for your lunch using a dollar bill, that's not going to, nobody's going to blink an eye. If you deposit some cash in the bank, that's also not going to raise any eyebrows. It's only going to raise eyebrows if the size and the nature of it is something that is out of the ordinary. And I imagine the same is true in the blockchain. That sure, you can anonymize your transactions using the Lightning Network or other technologies like that, and I think that's going to be totally fine and acceptable and is not going to look strange to anybody. It's only the cases where you have criminals that are trying to launder millions of dollars through these platforms where that's going to look a little strange to see $1 million in coming out of the Lightning Network or $1 million coming out of Monero being deposited in an exchange. Those are the cases where it's going to raise some eyebrows. So I think you have this natural equilibrium between the universe of anonymous transactions, which will most likely be predominantly on second layer solutions, and the underlying blockchain, which will be the settlement layer, which will be auditable.
Do you currently have customers in law enforcement or in government that you're working with?
Yes, we do.
And I guess you couldn't really talk about those in this environment.
No, it would not be appropriate for me to comment in details on that.
Well, that's really intriguing, Max. I've learned a lot, and I think I want to learn more. So we're going to dive into your company quite in depth here in the next weeks ahead. So I really appreciate your time today, and we will have you back in due course. I will have a pile more questions for you because this really intrigues the hell out of me.
Yeah, great. It's been great chatting with you. Thank you very much for inviting.
Thank you. Bye for now.